Before I start the video today, I want to remind everybody to go over to my good friend's channel, Enrique Reacts. He's doing a show today on protecting wealth and the importance of protecting wealth, how he's protecting wealth. Should be a really good show. Check it out, Enrique Reacts. Look, I love people who walk the walk. I love people who really do what they say what they do. I have a lot of respect for people like that, and he's doing a great job on his channel. So Enrique Reacts, check it out after you watch this video. Watch this video first and then check it out. But look, make sure that you are protecting your wealth. We are heading into some very uncertain times. Stock market at all-time highs. That's wonderful. But the party is going to wind down very soon. And people need to be very cautious of what we're heading into in 2025. So make sure you're protecting your wealth. Check out Enrique's channel. Stay tuned. It's Thursday, November 14th, 2024. Thanks for joining me today. We got a lot to talk about. I printed out some articles here. Feel free to comment down below. Nothing really in any order, but just some observations from some of the news I've watched today, some of the articles I've been reading. The first one from CNBC. Powell says the Fed doesn't need to be in a hurry to reduce interest rates. Markets did not like hearing that. Markets across the board in the red today. PPI was not too good either. PPI was up 0.2% month over month. It is up 2.4% year over year. The inflation genie is not going back into the bottle so easily. My question is, why is Jerome Powell and the Fed continuing to cut rates? And maybe he's not going to. Right here on the hedge, he says that we have a bumpy path ahead for inflation, no hurry to lower rates. But why have they been lowering rates? And now why all of a sudden are they maybe not going to lower rates? Are we going to begin to see more of the truth in 2025? All of a sudden the real inflation numbers come out, the real unemployment numbers come out. Maybe all of a sudden the Fed says, hey, maybe we're not going to cut rates. Maybe things are going to be a little bit different in 2025. I wonder why. But what is your thoughts on this? We're not near the 2% target. And why have they been cutting? My opinion is they know something that most people don't or don't want to admit. There's something going on behind the scenes. Jerome Powell is not stupid. He has got to know what is going on. So I think he is cutting because he sees big trouble, and that's why he's been cutting. But at the same time, cutting rates is letting the genie back out of the bottle. Initial jobless claims dropped to the lowest in 6 months. We got the jobless claim numbers today, came in at 217,000. The prior week, that was 221,000. So this should be good news, right? Again, another reason why the Fed does not need to be cutting rates. But we know that this data is very skewed. And more than likely, now I'm beginning to think that we may not see a rate cut in December. If we do, that's probably going to be the last one for a while, in my opinion. Who knows? I have no idea, ladies and gentlemen. None of this makes any sense at this point. It's anybody's guess. But what we do know is the markets need rate cuts. They're addicted to rate cuts. They don't care about anything. They don't care about unemployment. They don't care about inflation numbers. They don't care about housing numbers. These markets care about rate cuts. That's all they care about. Complacency is rising in this monster rally. This on the hedge today. Investors are chasing the everything rally into the year end. Question is, will it last? And I think people are just doing what the rest of the sheep are doing. They're just jumping in, riding this wave, and just hoping that it continues until it doesn't. Green lights. David Einhorn says the markets are broken and getting worse. In February, he said, I view the markets as fundamentally broken. Passive investors have no opinion about value. They're going to assume everybody else has done the work. So, you know, if everybody else is doing it, they're doing it. If everybody I know is jumping in and buying this or that, why shouldn't I? Like, I'm sure they've already done all the homework, so I'm just going to do what they're doing. David Einhorn goes on to say that when you see things like companies growing at GDP plus 2 percentage points and trading at 55 times earnings, this is nothing more than just a game now because there are no fundamentals. None of this makes any sense, and it's extremely dangerous. So what are your thoughts on this? Are you going to do what everybody else is doing? Everybody believes now, the majority of investors just believe that this thing is going to go on forever, and people are just going to continue jumping in. Nobody worries about fundamentals. Nobody's doing any homework. People are just jumping in. This really isn't investing, ladies and gentlemen. It is full-on gambling. And look, nothing wrong with that. If you want to gamble, make sure that you're that you're just being careful, because if you stay at that poker table 1 second too long, you lose it all. So be very, very careful. Advanced Auto cuts outlook, prepares 700 store closures. They reported a third quarter loss, slashed its full year outlook, and announced plans to close stores and distribution centers by the summer of 2025. 700 stores, ladies and gentlemen. That is a lot of employees that are going to be without a job. That is a huge amount of tax base that is not going to be going to cities. This is going to be a lot of empty buildings that will fall back onto regional banks. Again, this is going to affect a lot of people, a lot of communities with their tax base, a lot of community banks. Their stock is down 33% year to date. Huge loss. So again, we're being told that the jobless claims are only 217,000, but these people at Boeing are getting their pink slips now. You've got 17,000 people that will be out of a job in January. You're going to see 700 Advanced Auto stores closing this coming summer. These are huge numbers, and if the economy's doing so well, because the stock market's way up, right? Why are we seeing so many layoffs, so many stores closing, so many restaurants closing? I mean, something just doesn't add up here. Something just isn't making any sense. Wolfstreet.com, household debt, delinquencies, collections, foreclosures, and bankruptcies. Our drunken sailors and their debts in the third quarter of 2024. Household debt outstanding ticked up by $71 billion in the third quarter to $17.9 trillion. So we have $17.9 trillion now of household debt in America. Ask yourself, what could possibly go wrong? These markets are so overvalued. We're so overdue for a massive correction. Most economists who are awake would tell you that we've been in a recession for at least 2 years. Many of you would probably argue that we've been in a recession for even longer than that. Many of you would argue that inflation right now is at least 10+%. Services, real quick, services went up 0.3%, I believe 0.3% month over month also. So PPI's up, services are up. Everything is going up. It's going up slower, but things are going up. Look at the price of things from 4 years ago versus today. Are you making more money than you were 4 years ago while the prices of literally everything have gone up? Real wage growth is down. TheEconomicCollapse.com. Consumers are drowning in debt as hordes of businesses fail all over the United States. So think about where we're at right now. We are now literally probably just a few weeks away from hitting $36 trillion of national debt. U.S. households owe nearly $18 trillion. Credit card debt just broke $1.17 trillion. We got that number yesterday. Credit card balances rose by $24 billion in the third quarter. That is up 8.1% compared to a year ago. That is huge. Incomes have not increased by 8.1%, ladies and gentlemen, over the past year. But credit card debt has. Our credit card balances are growing faster than our paychecks. That is a big problem. And when you look at 30, 40, 50% of people's income going to rent or mortgage, 20% of people's income going to childcare, all this is unsustainable. All this is unsustainable. And you start adding health insurance, property taxes, property insurance, auto insurance, food prices, utility prices. I don't know how people are doing it. I really, really do not. Student loan debt now $1.61 trillion. And many of these people who owe on their student debt have massive amounts of credit card debt. They're living on credit cards right now at 23, 25, and 30%. How is this ever going to get paid back? How is any of this sustainable? When you look at the average car payment now, well over $700, 20% of this country is paying $1,000 plus on a car note. These aren't even payments anymore. These are mortgages, auto mortgages now, because they're so big. $1,000 plus. It's not uncommon. How long can this go on? How sustainable is all this? When you have 80% of this country living paycheck to paycheck, half the country doesn't even have $400 in cash saved up for an emergency, and the average car payment's around $738, $750, and 20% are paying $1,000 plus. People are one little accident, one little mishap away from very, very big trouble. They are one flat tire away from very, very big trouble. Be very careful out there, ladies and gentlemen, especially as we are entering the holiday season here. People want to go out. They want to spend money that they don't have. There's a lot of there's a lot of optimism right now that things are going to get much better in this country, and I pray to God that they do. But don't go out and run yourself deeper into debt on the optimism that things are going to get better next year. There's no guarantee that things are going to get better next year. And there's a chance that they could get even worse. I like the direction. I like what I'm seeing. But I think that people are buying into a lot of things changing very, very quickly when I don't think it's going to be that quick. I think it's going to take time to turn this ship around. A big ship doesn't turn on a dime. It takes a while to turn it around. And when you look at a country like ours that is bankrupt, $36 trillion in debt, $200 trillion unfunded liabilities, the disaster, the economic disaster that we are dealing with right now, there is no way that it is just going to turn on a dime and that next year, you're going to be making twice as much money, that prices are going to be cut in half. This is going to take time, ladies and gentlemen. So don't get yourself in trouble over these holidays because of the optimism. I hope that things are much better in 2025, but I think things are just too quiet. It's very eerie right now that things are so quiet with everything that's going on. I really do believe that we're going to see big trouble next year, 2025. And look, we have seen nothing but trouble for the past few years. U.S. retailers announced the closure of 6,481 stores so far this year. 48% of small businesses couldn't pay their rent in September. Don't you find that to be a problem, that something is seriously wrong when nearly 50% of small businesses could not pay their rent in September? We have a very inflated standard of living here in America, ladies and gentlemen, and we've been living way over our heads for many, many years. And now all this is imploding because the cost to borrow money is extremely expensive. The price of services, the price of cars and homes, the price of toys, the price to use your credit card, everything has gone up. And people just cannot do it. And they have been living way over their means for way too long. And it is now imploding, and you need to get ready because this is not going to go away in 2025. My opinion, I pray to God it does. I pray that there is some type of miracle, that everything is going to be fine in 2025. But I don't believe it's going to be that easy. So be extremely cautious out there, because I think we have some very, very bumpy roads to go over in the next 12 to 24 months. New York Post, I will end with this last one. Billionaire Ken Griffith wants to get out of Chicago quick. Sells record-breaking penthouse for a 44% loss. People are just getting out of these areas, aren't they? And just taking whatever they can get. He lived at number 9 at the Walton Condo Tower. He paid almost $34 million for this condo back in 2017, sold it for $19 million just to get out of Chicago. And some people can afford to take the losses and will do whatever they have to do to get out. And some people just cannot do that. But what does this say about Ken Griffin taking a huge loss to get out of Chicago? I think that people are going to come to the realization that there are fewer and fewer buyers out there, and that if you're going to move, if you're going to get out of wherever you're getting out, you may have to discount your property as a seller to do it, because there are fewer and fewer people that can buy your property. Now, look, this is obviously a very specific property, and very few people can afford $19 million. But to the average seller out there selling their home, let me remind all of you, this is not 2022. And the pool of qualified buyers, with all the data I'm telling you and sharing with you today, people are losing jobs, real wages are not keeping up, the savings rate in the US, people cannot save money. Inflation is still a huge problem. People have way too much debt. The banks are tightening up their lending standards now, and so it's going to get difficult. So if you're a seller, you better be cautious out there that you're dealing with a much smaller pool of buyers, people that can actually afford your home, whether it's $300,000 or $30 million. There is a much smaller pool of buyers out there, especially with all the unknown, all the uncertainty, and all the risk now that comes with owning real estate. So if you're a seller, be aware that things are changing rapidly, and as the economy continues to decay, so does the pool of qualified buyers. I'm going to leave it there today. Please comment down below on anything you want to comment on. Please remember to like, share, and subscribe. Have a wonderful day. God bless every one of you.